Bitcoin gives you that option to not have to invest in stocks and bonds or in real estate or in small businesses. Like you have the option to just say Bitcoin. And I think that that itself has been very attractive for me and for lots of others out there who see stocks and bonds and real estate and all these asset classes that are tied in with Wall Street is basically overvalued relative to Bitcoin.
Yeah.
And so I think that thesis can be true. And that then when you think about the financialization of Bitcoin, it's like, in that set of circumstances, could you really expect Wall Street to do anything other than try to adopt Bitcoin? Like, you think that they're not going to act in their self-interest?
Right.
This is the place where, like, famously Gordon Gekko is like, greed is good, right?
Right.
If you really think that Bitcoin is the best performing asset historically and going forward, then you should fully expect Wall Street to just go all in on Bitcoin. And I think that there's part of it is a concern that Wall Street is going to co-opt Bitcoin, right? And Blackstone is going to go in there and they're going to like change the rules and they're going to muck it up and maybe with a nefarious ultimate end of just destroying Bitcoin, or more benign of like advancing their own interests and that undermining Bitcoin, right? So like trying to get everybody to custody with the ETF and like try to just clamp down on the ecosystem and control it.
Take away self-custody and something like that.
Yeah. I think it's the opposite. So I think that BlackRock, Fidelity, all of the other financial institutions that are embracing Bitcoin, they are joining the Bitcoin network. And really, I see it as like they are finding how to integrate with Bitcoin, not how to integrate Bitcoin into their one. And so when I look at like, so we have to start with the idea that like 6102 executive order means that these are giant honeypots of Bitcoin that can get seized by the government when the crisis arises, right? When the time is right. I think that is a huge risk, and that the only way to counteract that risk is through lobbying. I actually don't think that it's as effective as people think to say, oh, if we all self-custody, that we can avoid 6102. Because ultimately, even if you self-custody, at some point you want to do something with that Bitcoin.
Right.
Right? Like, you want to pay for your kid's vacation to Disney World, and you know that basically if you take the Bitcoin out of cold storage, there's no exchanges to bring them to, right? You might have like a Bitcoin guy on the street who, can explain
black market rate.
Yeah. Yeah. But like, do you really, want to take out like 50 grand, Yeah. And so then suddenly you're in a situation where 6102 affects you, even if you're self-custodying. And so even if you are a self-custody maxi, I think that you want to be engaged in politics so that not only do you avoid that outcome, but you create a better outcome of, hey, no capital gains taxes on your Bitcoin, right? You don't even need a KYC AML when we take them out of cold storage.
Yeah.
And so I think that we want to be engaged with the policymaking process to advocate for the best outcome. And I think that the more financialization of Bitcoin there is, that it's great to have BlackRock and Fidelity and MicroStrategy and anybody else hiring lobbyists and like getting Bitcoiners in the room to advocate for these policies that are good for everyone, right? They're good for the treasury companies, they're good for the miners, they're good for the publicly traded companies, for the financial institutions, and for the self-custody pleb who just wants to, pay for his kid's vacation.
Yeah. Yeah, I mean, the financial industry is one of the biggest lobby groups out there, so of course,
they're the most powerful, right? Like,
well, you can get the pharmaceutical companies to put it on their balance sheets. That might help out too, but we weren't going to do about that. But so I would agree with you on that. But it seems like maybe there's a lot of people that don't understand capitalism. Then, so they think that again, right, all this financial stuff goes away. So you're a grifter if you're going to help these companies raise money. How dare you? Don't you know people should just go hodl their Bitcoin on a hill, right? So I think there's that. And then almost they want to dictate how Bitcoin should be used.
Yeah. So, okay, so I think that part of it is just...
We don't need to call it any names, but you know who we're talking about.
Yeah, the CAC dependency of, like, a lot of OGs saw what happened with Mt. Gox. And so when you think about it probabilistically from, like, an actuarial table perspective, if you were really scarred by Mt. Gox, like, you have a very set, like, list of best practices about how you can survive with your Bitcoin.
And you could also say Terra Luna and Celsius and
Absolutely.
and all that, yes.
But then also, like, even if you held a Coinbase, I've heard of stories of people struggling to get their Bitcoin out of Coinbase because of KYC AML, right? Of like, okay, now they've got additional verification, all of that. And so I completely understand. And, you know, like, this is from lots of secondhand, firsthand, you know, sightseeing over the past decade. We cannot undervalue the self-custody, right? So, like, even for somebody who's interested in just purely financial returns, you have to multiply the financial returns by the probability of loss from not self-custodying, from having a trusted third party. Okay, so now today, I think that with the election of Trump, there's a real big, like, psychological problem that's facing the Bitcoin community, which is that we've had it in, for the past 4 years, I think we've had a really nice mindset of Joe Biden and Kamala could just come in and take our Bitcoin every day.
Right.
And so, like, self-custody is non-negotiable. Now it's realizing that actually, as long as we have, like, some baseline amount of property rights and working institutions here in the U.S., they can't undo the ETF. So to come in and say, oh, well, they could seize, like, the ETF, that's basically kind of in the same realm as saying they could come in and seize all the 401ks and, you know, all
the gold ETFs.
Gold ETFs, the S&P 500, like, everything, right? And so I think that there's a reality check of, like, a massive amount of the world's wealth is in U.S. capital markets and is actually reliant on the regulatory framework and the rule of law of U.S. institutions. And the reason why the U.S. continues to be the wealthiest country in the world is, I would argue, due to the stability of the architecture that was set in place by the founding fathers in, you know, really divinely inspired wisdom 250 years ago.